We're going to bring on our next presenter here in just a moment. This is going to be Erik Hayden from Urban Catalyst. Just coming on stage now. There you are,
Hey there,
Erik.
Jimmy. Good to see you.
How are you doing, man? Good to see you as well. Erik, without further ado, please take it away.
Excellent. Thanks, Jimmy. I'll just share my screen here. So Urban Catalyst, we are an opportunity zone fund that is focused on ground up development projects in downtown San Jose, California. Just to start us off, here at Urban Catalyst, we've been featured in the news quite prominently over the last 2 years that we've been fundraising. Over 170 news articles written about us, just a lot of positive buzz about what we're doing here in downtown San Jose. Probably most important of that, we were named by Forbes magazine as one of the top 20 opportunity zone funds in the country. And that was out of over 100 funds that applied. Really just national validation from Forbes that we're doing things the right way. Let's take a little bit of a step back. Here are the opportunity zones in the San Francisco Bay Area. For this fund, we wanted to focus on downtown San Jose. Here are the opportunity zones in downtown San Jose. You can see almost all of the downtown areas covered with 4 census tracts that are opportunity zones. You know, it's interesting, when I formed Urban Catalyst, I didn't even know about opportunity zones. My plan was to form a real estate equity fund that focused on doing ground up development projects in downtown, really because of the overall macroeconomic trends in Silicon Valley, pointing towards downtown San Jose as the place, or really the next place to do development on a large scale. And it was only after I started forming Urban Catalyst that I learned about this program, and that everywhere I was planning on doing business was already located in the zone. And thought, boy, wouldn't it be great to be able to give my, my investors the additional tax benefits associated with this program. So I mentioned we're not just fund managers, we're also developers, and we're the developers of all 7 of our projects. We're built to do ground up development in downtown San Jose, but we've been doing development throughout the San Francisco Bay Area for our entire career. 3 things that we want to see when we do development anywhere. The first is we want to make sure there's a demand for all of the different types of projects that we're building. And really here in downtown San Jose, that demand is generated by the Silicon Valley job engine. We want to do business in places where there is transit and physical infrastructure already in place. Downtown San Jose is the only true urban environment in Silicon Valley. Diridon Station, right in the heart of downtown, is slated to be the largest train station on the West Coast. It already has a variety of mass transit options that connect to it, including Caltrain. And now BART, which is the largest mass transportation system here in the Bay Area, is now fully funded to connect to Diridon Station over the next 10 years. Finally, San Jose State University, located right here in the heart of downtown. It's the 2nd largest university in the Bay Area behind Cal Berkeley, with over 35,000 students. Last but not least, we want to do business in a place where the local government wants to see development happen. And that is not the case in most of California, but it's absolutely the case here in downtown San Jose. This is a picture of my partner Josh and I with the mayor of San Jose, Sam Liccardo. He's been the mayor for 6 years, and before that, he was the council member representing downtown San Jose for 8 years. And it's really the policies that he's put into place that have streamlined the pre-construction process and just made it so much easier for developers to do business and attracted developers like Urban Catalyst to downtown San Jose. To show you in better detail what's happening here in the downtown area, I wanted to show this map. This black line represents the opportunity zone. Our headquarters, Urban Catalyst, is located right here in the heart of the zone. We're right next to Adobe's world headquarters and Zoom's world headquarters. Adobe's been in downtown for over 27 years. They're in the process of building their 4th high-rise tower right now. Zoom obviously is now a household name. They recently went IPO. We have many investors from Zoom at this point. We had a bunch of them in our office right after the IPO occurred. Here is San Jose State University. So as I mentioned, right in the heart of downtown. This red dashed line represents where the new BART line will be running, with a couple stops downtown and then connecting here into Diridon Station. Google has been the big story here in downtown San Jose really over the last 2 years. They've purchased more than $450 million worth of property, and that's over 80 acres. The plans that they've submitted to the city show them building roughly 7.5 million square feet of office and 5,900 residential units. At build out, this will be Google's largest campus on earth. And the good news for San Jose is that Google has continued to acquire land and invest in San Jose throughout the pandemic. Also wanted to show here in orange and green, these are other large developers, J. Paul and Urban Community. In the last 18 months, J. Paul here has spent $650 million on acquisition in downtown. His plan is to build 5 million square feet of office. Urban Community in the last couple of years has dropped 300 million on land acquisition. They're going to build a variety of different asset classes. And the reason why I want to bring up other developers and big tech companies is here at Urban Catalyst, we saw this wave of development coming to hit downtown San Jose. And we wanted to get in on the ground floor and acquire property before the prices were driven up by other developers and big tech companies. And that's exactly what we did. We acquired these 7 properties here in the downtown area. We have a very diversified portfolio of real estate asset classes. We plan on starting construction on all of our projects in 2021 and 2022. Over here in the Diridon Station area next to Google's mega campus, we have an extended stay business hotel. This is a multi-family apartment building. This is a senior living facility, and more specifically, it is assisted living and memory care. Here in the core of downtown, we have 2 smaller office projects. This is a high-rise residential project. This is high-rise student housing. What makes Urban Catalyst different than other opportunity zone funds, and I know most of you have been listening to a bunch of different pitches today, so this is a very relevant slide, is most other funds, that's what they are. They're funds. They're part of a larger platform. Their plan is to go out, raise hundreds of millions of dollars, and then look all over the country for developers that have projects in opportunity zones for them to partner with. Here at Urban Catalyst, we look at Steve Jobs and Steve Wozniak because we're in Silicon Valley, and of course, these guys are pretty prominent figures. And we think, did these guys go out, raise a bunch of money, and then hire someone to build them a computer? And the answer is no. They built a computer and then they took it out to the market. And that's exactly what we're doing here at Urban Catalyst. We're not just fund managers, but we're also the developers of all of our projects. And we have 7 projects in our portfolio, and now we're taking those projects out to the market to finance them. Now, a little bit about me. I've been in real estate development for my entire career. In general, I've built institutional quality and scale projects, over $3.5 billion in real estate development. A number, boy, it's a big number that keeps increasing here every project I do. And when I formed Urban Catalyst in 2018, my plan was to build an all-star team of downtown San Jose developers. And I did just that by bringing on Josh Burrows and Paul Ring as my partners. Josh is my chief operating officer. He spent 12 years prior to this working with a company called Barry Swenson Builder as their lead developer, building a variety of different asset classes. Now he's our chief operating officer. Paul Ring, executive vice president of development and construction. Paul, for 15 years prior to joining Urban Catalyst, was the lead developer at the Core Companies. They specialized in multifamily and below market rate housing here in downtown San Jose. Now we have a team of 13 development and construction professionals that are focusing on our 7 projects. Of course, we're not just developers, we're also fund managers. Morgan Mackles is our head of investor relations. I've known Morgan for over 26 years. He and I went to high school together. Morgan, he builds scalable and repeatable sales processes and teams. He's worked for big and small companies, Fortune 500 startups. And Morgan is the primary reason how we've raised over $89 million to date in this fund, on our way to raising $105 million by the end of this year. Sean Raft is our chief administrative officer. He's an attorney. He manages all of our financial consultants, our legal team, our accountants that do our tax and audit, and our fund administrators. What he really does here is he dots the I's and crosses the T's. When folks are thinking about investing into opportunity zone funds, the first thing they always think about is the tax benefits. And I'm not going to go through the tax benefits because I'm sure that everybody on this call is in full understanding of what those benefits are. But what I did want to talk about is what really matters, which is the underlying real estate associated with these funds. Because if the biggest tax benefit is after 10 years, you get tax-free profits, there better be profits after 10 years, or really what's the point of the whole program? So here at Urban Catalyst, we focus on our real estate and our development team, because our development team, our track record and experience, that really is the best indicator of future success. So when we see ourselves, we see a solid real estate equity fund, and we see the opportunity zone tax benefits really as just the icing on the cake for our investors. Here are the 7 projects that we will be doing in this fund. I've talked a little bit about them when we looked at the map, but I'll go through these rather quickly. This is the Fountain Alley building project. It is office over ground floor retail. It's located right in the historic area of downtown San Jose. This project, we're building Silicon Valley's largest rooftop bar, really to take advantage of the 300 days a year of sunshine we have here in San Jose. Got a lot of press about that rooftop bar. This is the Mark. It is a student housing high-rise. San Jose State really has created a lot of demand for student housing as it's really transitioned from what used to be a commuter school into more of a school where when folks are accepted, they're moving to San Jose to attend college. Their own internal studies show they need about 6,000 student housing beds. We've been in discussions for over 9 months with them to do a 49-year master lease. Well, they will operate this building. Of course, having a credit tenant with a long-term lease obviously reduces the overall risk of the project for our investors. This is our Delmas Senior Living Facility. It's assisted living and memory care. You know, we've done several of these throughout Silicon Valley in our careers. This project with its location, you know, they haven't built a project like this in downtown San Jose in over 35 years. And with this project's proximity to some of the more affluent neighborhoods in San Jose, there just is a lot of demand for senior living. This is the Icon at Civic Center. It's our high-rise multifamily project across the street from downtown San Jose. These green awnings right here, you know, when I was showing that map that showed where the BART station will be located, BART station is going right underneath this street in front of the Icon, and in front of these green awnings, that's the new portal to the underground BART station. So this project literally being built next to a mass transit station, making it the epitome of transit-oriented development. Down here on the lower left, Keystone Hotel. This is a Marriott Town Place Suites extended stay business hotel. We signed our franchise agreement with Marriott at the end of last year. It's a very coveted flag for San Jose. We've done 3 of these in Silicon Valley in our careers. We've been very successful with them. Obviously, during COVID, hotels have been hit pretty hard as an asset class. The good news about this project, we don't plan on starting operations until June of 2023. And by then, the pandemic should have passed. This is Madera. Madera is a multifamily 8-story apartment building. I personally have built 1,000 multifamily units within a half a mile of this location. So this is right in my wheelhouse. Here in Silicon Valley, we have some of the most expensive housing costs in the country and really in the world. And that's because we've been creating so many jobs for every housing unit that we built. We've been averaging 5 jobs to every housing unit built for over 30 years straight. And that's created what California calls a housing crisis, and it's especially strong here in Silicon Valley. We literally can't build multifamily fast enough to meet that demand. Finally, this is Paseo. Paseo is our only renovation. All of our other projects are ground up. This used to be a 12-screen movie theater. We're converting it to 2 floors of office with ground floor retail. What makes this project unique is because it used to be a movie theater, the average floor to ceiling height is 24 feet. And that allows us to do some really unique things for our future tenants. Things like floating conference rooms, mezzanine levels, and catwalks that connect to our rooftop gardens. This is also located on the Paseo de San Antonio, which is a major pedestrian walkway that connects San Jose State to Cesar Chavez Plaza. And recently, several high-profile downtown San Jose restaurants have moved onto the Paseo de San Antonio. We plan to add to that with 2 full-service bars and restaurants as our ground floor retail tenants, really creating a restaurant row. I wanted to dig a little deeper into our timeline. I mean, all opportunity zones are a little bit different. We think with our structure as a partnership, we've maximized the benefits for our investors. Our overall goal is to maximize investor returns, give money back to our investors as soon as possible with the associated tax benefits that go along with opportunity zones. So I wanted to go through this with everyone. Starting off, we're fundraising in 2019 and 2020. We closed the fundraising portion of this fund December 30th of this year. I mentioned already that we've raised $88 million and our plan is to raise $105 million by the end of this year. We're right on track to do that. Our minimum investment size is $250,000, although our average investment size is closer to $500,000, with our largest investors coming in around $5 million. Of course, everybody needs to pay their taxes in 2027, so I wanted to put that here on our timeline. Then finally, our plan here at Urban Catalyst, sell all of our properties as soon as we hit that 10-year mark, liquidate the fund, and return the majority of the profits to our investors. Of course, because of our structure as a partnership, we're able to make distributions to our investors prior to the end of that 10-year period, which is really important to our investors. So I wanted to go through that. The first time we plan on doing it is through our refinance and distribution. Here are 7 projects, and I kind of call this Developer 101, which is in 2021 and 2022, we'll start construction on all of our projects. As they're completed, leased up, and fully stabilized, we'll refinance them with permanent financing. And what we do is we take that permanent financing and we pay off the construction loan that we use to build the building. And then any excess refinance proceeds, we distribute those to our investors tax-free. These are the anticipated dates of our refinance events. And what our investors always ask is, will you distribute enough money for us to pay our taxes here in 2027? Our answer is, of course, there is no guarantees associated with investment into our fund. However, we do plan on distributing enough money to pay taxes in 2027, in fact, significantly more. Also, we will have stabilized assets that will be cash flowing. You know, it's interesting, this program has really created a hybrid type of fund because of the 10-year hold to get tax-free profits. In the first 5 years, we're really a value add fund. You know, we're creating value through ground up development. In the second half of the fund, you know, we're more of a core fund where we have these stabilized assets that are cash flowing. And then of course, we plan to sell them at the end of 10 years. Another interesting thing to point out, and this was, you know, really important as a part of the clarifications that came out from the IRS and the Treasury, which is because we're structured as a partnership, we're able to pass through losses, and that includes depreciation. So any real estate investor that owns property, they obviously are able to depreciate that property on their tax returns every year. We're no different, and we can pass through that depreciation as losses to our investors. But where we are different, and this is true for any opportunity zone fund, is when we sell our properties, there is no depreciation recapture. So we don't have to pay back that depreciation. That is really significant, as we expect to have a significant amount of depreciation that come off of our assets in excess of the cash flow that we'll be distributing in the second half of the fund. So when you don't have to pay that back when we sell our properties, and typically if you own a building, yes, you do have to pay it back when you sell the property, but specifically for opportunity zone funds, you don't. And huge benefit, somewhat overlooked by the media when it came out. So overall, this is all of the different things we covered. Here's our investment period. Here's our refinance and distribute. This is our cash flow. Here's when you have to pay your taxes. And then here's when we sell our properties after 10 years. This is an example of our projected returns. If you invested $1 million, we're projecting 80% of your investment will be given back to you between 2023 and 2026. After that, we're looking at a cash flow of around $25,000 a year, and then profits of $2.3 million. One last thing I wanted to mention before I give out our website is that we do have a bonus share program associated here at Urban Catalyst. We want to reward our investors for earlier investment. This month, if you invest before the end of the month, we give 1% bonus shares, and that is, if you bought $100 worth of our units, you get $101 worth of our units. That goes to zero next month. It's been a very popular program, so if you are interested in investing in Urban Catalyst, please contact us this month to get bonus shares. And for more information, please visit us at urbancatalyst.com/opportunityzonedb.
Awesome. Well, thank you. Thank you very much, Erik. Let me get to some questions here. Just a second. Let me pull up the right part of my screen here. Kathleen Greeley is asking a question about the area that you're investing in. She wants to know, are you doing any work in Oakland or in the area of Antioch or maybe in Bayview, Hunters Point? And maybe you can speak a little bit more about why you like San Jose as much as you do.
Sure. So the answer is for this fund, we are not. We are focused only on downtown San Jose, and we're only doing our 7 projects that we have identified. Um, I've done a lot of business throughout my career in Antioch and in Oakland. In fact, prior to Urban Catalyst, I was the president of Zarshan America, and the largest project in the city of Oakland, which is Brooklyn Basin. We're the majority investor into that project. Did about $200 million in infrastructure improvements, and it built out that project will be 2,300 units. So I'm a huge fan of Oakland. However, for this program, I wanted to focus on San Jose, and it's really because of Silicon Valley and a lot of the tech migration that's been occurring over the last 10 years, making it so that downtown San Jose is really the next stop on the train for development.
Yeah, what I like about your fund, Erik, and by the way, that's I meant to mention earlier, that's really cool, the bonus shares that you're offering this month. I haven't heard of anything like that before. That's pretty cool. But one of the things I really like about your fund is, to use a hockey analogy, I play hockey myself, you guys are skating to where the puck is going to be. I mean, you see San Jose as the next place where the tech industry of Silicon Valley is really going to migrate into. There really isn't a lot of other options for them. Especially since you're bounded by the ocean on the west side of the state. A few more questions here coming in now. If let's see, let me ask you this question, Erik. When you were on my podcast a little while ago, back in June, a few months ago, we did a little segment on the differences between 1031s and opportunity zones. Are you working with a lot of investors who had considered 1031 and maybe this is a good alternative for them, or maybe somebody has a blown 1031 exchange, they can come to you at the last minute, or what's been your experience there with 1031 investors?
The short answer is, opportunity zones, this program is relatively new, and 1031s have been around for 50 years. So it's really the tried and true plan for real estate sales. That isn't to say that we don't have investors that sold real estate as their capital gains event. We have about 20% of our investors. We have over 200 investors now. However, the majority of our investors, their capital gains event was the sale of stock, over 68% now. And a lot of that has to do with us being here in Silicon Valley, but also really there's never been a safe harbor for the sale of stock to shelter capital gains, to defer them and reduce your taxes the way that opportunity zones can. And now that opportunity zones are here, it really is a great program to take care of that. And as tech investors learn more and more about it, we're finding that that is the constant. I'm on the phone every day with people from Google, from Facebook, Uber, Zoom. So we have quite a few groups, these big tech companies here in the Valley that have invested, or their individuals that work there have invested in Urban Catalyst.
Yeah, so we're talking about Silicon Valley. We're talking about tech firms, and the area is largely viewed as a very wealthy part of the country. So this question, I think, is really important for you to address, Erik. How does this qualify as an opportunity zone? Aren't these supposed to be in areas of financial need, certain poverty level, bring jobs, et cetera? Maybe you could talk a little bit about how downtown San Jose does fit the mold of opportunity zone investing.
Sure, and downtown San Jose is almost the perfect example of a place that needs to have opportunity zone designation. It's a little bit of the history of San Jose. One of the first cities in America really to experience urban sprawl. And by 1965, downtown San Jose was completely dead. There was nothing here. It was just empty buildings boarded up. And over the last 25, 30 years, the redevelopment agencies in San Jose have pumped millions of dollars or billions of dollars in government money into improving the downtown area, not only acquiring land and then selling it to developers at a discount, but also subsidizing developers to build new buildings. Of course, they put in great infrastructure, street trees, transit, everything you can think of to try and attract private money to come back to downtown. But it was only about 3 years ago that we saw, as I mentioned, that wave coming where private money was finally going to come to downtown, and having the opportunity zone here really has helped spur that investment and done what San Jose has needed to be done for 60 years.
Good. That question coming in here, how has fundraising been going for you guys during COVID? Has that had any impact on your fund? Did things slow down? Did things pick up maybe?
Things slowed down a little bit. I'd say we went to maybe 50% fundraising during the peak of COVID. But a lot of that had to do with, our prototypical investor who has the sale of stock. I mean, who is going to sell stock in March or April when the stock market was so far down. Now we're seeing that pick back up and then some. I would say that we're not only where we thought we would be at this point, but we're going to exceed our goals. Like, for example, last month we expected to raise around $3 million and we raised $12 million. And based upon our lead flow and our indicators, it looks like we're going to have really big November and December before we close the fund. By the way, that's probably pretty common out there in these tax advantage funds at the end of the year. Typically, people look back over the year, understand their capital gains needs and how they want to defer and reduce taxes. Add that to the government extending everybody's 180-day period to December 31st. So that means anybody that had a capital gains event going all the way back to October 4th of last year is still eligible to invest. And you put that, we're closing our fund at the end of this year. It's going to be a crazy December. So if anyone is interested in investing in Urban Catalyst, I highly recommend folks coming in November. My teams, they're going to be dealing with a lot of investor intake. We want to make sure we can give you the personal attention that you guys want.
Yeah, that's a great point you make there. Your holiday season is going to be pretty busy, I fear, Erik. A good problem to have, I guess, for you, but that's why you want them to get in sooner rather than later. It'll be a lot easier workflow for you. A question just came in from Eagles here in the chat. He says he likes the highly focused or the highly localized focus of your Urban Catalyst fund. And he asks, what kind of community or social impact metrics are you tracking for your portfolio?
Sure. So that's a big thing for us here at Urban Catalyst. I mean, not only are we local downtown San Jose developers, but the revitalization of downtown San Jose has been a passion for us. And we knew that eventually there would be a program that comes out, whether under the Trump administration or Biden administration, and now it looks like the Biden administration. We knew there'd be a program where there'd be reporting requirements. Last year, we had a third-party nonprofit do an analysis of some of the benefits that we're going to create here in downtown. And as we expected, our benefits, they're really just off the charts. I mean, the first thing you look at is the amount of taxes that the government doesn't collect from funds like ours. We more than make up for that in the amount of additional property taxes that our projects will pay over a 10-year period. So it's really, from the government's perspective, almost net neutral. Then you look at just how many jobs we create on a temporary and permanent basis. Because of the fees that we pay to the city of San Jose, we'll end up building hundreds of below market rate housing units. We'll be dedicating enough money to buy and develop acres of parkland. So really significant community benefits. And we're very happy for that. We're really looking forward to when they come out with this program where we get to report how awesome we are, because it's really going to be impactful.
Good. The question coming in from Kelly now, and she's responding to our conversation on 1031s, where she's used to needing a 1031 exchange accommodator or a qualified intermediary or a QI in industry parlance. She wants to know, do you need an accommodator to go through a qualified opportunity fund like Urban Catalyst?
Absolutely not. We're very simple, right? We send you our private placement memorandum. At the end of that, there's an appendix, which is our subscription agreement. You sign the subscription agreement. That makes you a member in the LLC that is the fund. We send you wiring instructions. You wire money to the fund's bank account. It's pretty simple. People that have 1031 exchanges and their money is with an accommodator, and they either are choosing not to continue with that process, or they're getting close to either their 45-day deadline or their 180-day deadline. We've been very successful working with accommodators to have them transfer the money to our fund. So if anybody is in that situation, that's something that we've solved in the past.
Good. Right on, Erik. We'll do one more question here. And this one says, hey, if you guys have time, can you go over that depreciation part again? Did you have a little depreciation section of your presentation you can go back through again, Erik?
I did, but we can just talk about it, and it's pretty easy.
Go ahead, man. Yeah.
Yeah, I mean, you own a real estate asset. Anybody that owns it, even if you own your own house, you're depreciating the structure on your taxes every year. Different types of real estate asset classes have different depreciation schedules. The 2017 Tax Cuts and Jobs Act accelerated depreciation on a variety of real estate assets, making it more beneficial to own real estate. You don't have any depreciation recapture as a part of the Opportunity Zone program. And why it's so significant, if I owned a building just in regular life and I wanted to sell it and I wasn't going to do a 1031 exchange, I have to pay back all the depreciation I've taken as passive loss from that property for the entire time that I've owned it. For Opportunity Zone funds, there is no depreciation recapture. So I get to use those new accelerated depreciation schedules, depreciate the heck out of all my buildings, pass through all of those losses to my investors to offset any income that they have from this fund or other real estate assets that they might have in their portfolio. And then at the end of the 10 years, when I sell all those assets, I'm able to distribute profits tax-free because of the program. And you don't have to pay back the depreciation. And one additional thing that I didn't mention, Jimmy, and this is really important too, these are passive losses that we're passing through, but when we sell those assets at the end of 10 years and we liquidate the fund, those convert to active losses to offset ordinary income. And that's just amazing. To give you an example of the scale at Urban Catalyst, my example, if you invest $1 million, we're looking at passing through roughly $1 million worth of depreciation. So it's a really significant depreciation pass through. And as I mentioned, the news did not cover that when it came out and was fully clarified as part of the December 2019 guidelines. And I thought that was going to be front page news of the Wall Street Journal, and you were going to see that spike in the search for opportunity zones again, but very little coverage. I mean, when we learned about it, we did a little dance here in the office. I mean, it's so beneficial to our investors, right?
Yeah, it absolutely is. I call it one of the hidden benefits of opportunity zone investing, because it's not one of the big three that you hear about all the time. But yeah, definitely it's a sizable benefit that shouldn't be overlooked. Well, Erik, and I apologize if we didn't get to your questions. I think we may have a couple more we didn't get to, but I got to keep things moving along here. So Erik, thank you for joining us today. Urban Catalyst, check out their website. That was urbancatalyst.com, I believe. Is that right?
urbancatalyst.com/opportunity DB.
Awesome. All right. I'll post that link in the chat here in just a minute. Erik, again, thanks for joining us today. Appreciate it.
Jimmy, always a pleasure. Thank you so much.
All right. Thank you, Erik.